Now let us move on to another topic of inventory management, that is valuation of inventories. Inventories means the raw materials which we purchase have to be valued, because the inventories constitute, or the purchase of inventories is a huge expense for the company. Similarly, those inventories we put into production, we consume it and we produce or we make final goods, and from there we get the sales. So the inventory contributes a major portion of the income of the company. So it is necessary to value the inventories. Inventories should be valued because we have to ascertain the value of the stock being held, the value of the closing stock held in the firm. So in order to ascertain the value of closing stock, or in order to ascertain the value of the movement of the inventories, we have to do the inventory evaluation or inventory valuation. So there are mainly different methods for valuation of inventories. They are FIFO method, LIFO method, then average price method, base stock method, etc. So mainly we have to discuss on FIFO, LIFO and weighted average average price methods. So first one is a FIFO method. FIFO stands for first in first out method. Okay, so first in first out method means as the name suggests, first in first out. That means we receive inventories in an order, and receipt, similarly we will be having issues or sales. So those inventories which are arrived first are sold out first. That is the assumption of FIFO method. That is first in first out. We will be receiving inventories and we will be selling out, or will be issuing it on the order of its receipt. Then materials received first are issued first. That is the concept of FIFO. Materials which we have, if we receive material A and material B, first if we have received material A, then we'll be first issuing material A. So that is the concept of FIFO method. And once the material A's stock is completed, we'll move on, or we'll issue the material B. So there is a chronological order. That means according to the date or according to the time of receipt of material, we issue the materials. So here we issue materials from the oldest. So materials will be valued from the oldest, or from the first material procured, and issue will be made, so on. So there will be closing stock held. So if in our example we told A and B, we first we have procured A, and second we have procured B, and when issue come, first we will take from this A, we'll issue, and if A is complete, we'll move on to B. So always materials will be valued at the oldest, or from the chronological order, materials will be valued on the oldest price. So thereby closing stock will be valued in the latest price. That means here, for example, A is a material for rupees 100 and B is material for rupees 200. Now if we want to issue on another day, if we want to issue some material, then we'll issue, say for example it is C. We issue C, some units we issue. So this C will be taking from this A. That means the material which have arrived first. So thereby we have completely issued this A. Then what is left is B. So this B will become our closing stock. So this is the method of first in first out method. You will be more clear while doing the problem. Another method is LIFO method. LIFO method is just a reverse of this FIFO method. I'll just tell one more example instead of this A and B. Yes, listen. We have purchased some, say for example, some 100 units at the rate of rupees 1. Now next day, this may be on January 1. Next is January 3. We purchase another 200 units of material at the rate of rupees 2. Let this be the situation. Then on January Then on January 5, we make a issue. For example, we make an issue and we are making issue of some 100 units. So in January 5, we issue 100 units at the rate of rupees. So just told in the question it will be only told we issue 100 units. Then we have to choose at which rate we have to issue. So under FIFO method, the rate will be first in, which is the first in 100 at the rate of 1. So only 100 we have to issue. So these 100 we can take from this first lot. So we issue 100 at the rate of 1, that's equal to 100. Then what is left? The left one is this 200 units at the rate of 2, and this will become our closing stock. So that is the example of FIFO. Then similarly under LIFO method, it is just the opposite. That means when issue come, we issue from the latest. That means here we have to issue 100. But this 100 under LIFO method, we will issue at the rate of rupees 2, because 2, that is the latest purchase. So 100 into 2, 200 will be the issue. So balance will be how much? The initial 100 is there itself. So that will be there. Also we have took this 100 from this 200. So there how much is balance? 100. So that will also be there. So this will be our closing stock. Means we issue from the latest stock. That is LIFO. Last in, first out. Last in is 200. From that 200 we issue 100. And the balance there is also 100 that is left. So that is LIFO method, just reverse of FIFO method. Materials which is received lately or last is issued first. So materials are issued on the latest price, whereas closing stock will be from oldest price, because the first purchase is still there. So closing stock will be based on the oldest price. So this is the difference between the two methods, FIFO method and LIFO method. Hope you are clear with. Next method is average price method. Third one is average price method. So average price method of valuing inventories. What is the assumption here is that? The assumption here is that we purchase materials one by one maybe, but we may be storing the materials together. So all the materials will be mixed up. So under average price method, it is told that since we club the materials, we cannot say which material will be issued. We may take one among them and issue. So we cannot use LIFO or FIFO, because under FIFO or LIFO we have to keep the materials accordingly, properly, which came first, like that. But average price method, the assumption here is that we may purchase the stock and we may mix up it together. So we will not be able to choose which one was purchased first. Okay, so that is the assumption of this average price method. So that is why we cannot select a fixed rate. So here it is, materials are issued at average price. That means if we in our example we have told 100 units at the rate of 1, then another purchase 200 units at the rate of 2, like that all we have purchased, but we mix up all these stocks together. So we cannot select the rate 1 or 2, but we have to select the average of this 1 and 2. That is what is average price method tell. So materials are issued at average price irrespective of rate or date. So date and under FIFO and LIFO it was in the chronological order. Under FIFO we took those material which we have procured first, we issued first, and under LIFO those materials which was procured lately we issue first. So under average price method we do not choose an order. There is no importance of rate or date, we take an average rate. So under average price method, there are again simple average price method and also weighted average price method. Simple average price method means here we just like this, just calculate the average of the two rates. We calculate the average price. Okay, that's it. Then we'll get the issue rate. Then weighted average price method, issue price is equal to value of material divided by quantity in stock. How much material we have to issue, and it is based on the quantity. And it is suitable when wide fluctuations in price of material. Sometimes there will be wide fluctuations, high rates and low rates will be there while we purchase. So at that time we can use weighted average price method. So this is the average price method. So these are the main four methods of calculating or valuing inventories. First one is FIFO method, second is LIFO method, and third is average price method. Now I'll show you how to do the problem. I'll show the format of the problem. The format of the problems for FIFO, LIFO and average price is almost the same. I'll just show how is it. We have to prepare the stores ledger. It's the heading we have to give. Stores ledger. Then we have to mention which is the method we are using. If it is FIFO or LIFO, we have to mention FIFO or LIFO. Then we have to draw like this. Date column. Here we do the receipts, issue and balance. Then again to subdivide into quantity, rate, amount. Here also quantity, rate, amount. And here also quantity, rate and amount. Okay, so this is the format. Stores ledger. If it is FIFO method, mention FIFO. If it is LIFO method, mention LIFO. In average price method, there is a small difference in the last column that I will see. So if it is FIFO and LIFO, this is the format. And what we have to do, we'll be in the question, we'll be given different, maybe sometimes we'll be given opening stock. Then we'll be given issue of receipt of materials according to the different dates. Then we'll be giving issue like that. So in our example, as we have already told, we purchased January 1, we purchased 100 units at the rate of 1. Then January 3, 200 units at the rate of some 2. Then January 5, we have issued some 100 units. Like that the question will continue. So if in this example, under FIFO method, how will we write as January 1? So date we have to give January 1. Then it is actually it is purchase. So purchase will come under receipt column. So 100 at the rate of 1. So quantity is 100, rate is 1 and amount will be 100. Okay, then next is January 3. So another date. So what we have to think, if we close a date, daily we have to close the balance column also. So receipt we have received January 1 this much. No issue on January 1. So we have to write in the balance column also. What is the balance left? This receipt will be the balance. So 100, 100. Okay. Then we'll move on to January 3. Then again say receipt 200 at the rate of 2. So 400. Okay. Then any issues on January 3? No issues. So we have to again write the balance column. Balance column, now there are two balances, so we have to separately write 100 at the rate of 100 and 200 at the rate of 2, 400. So this is the total balance on January 3. So here one thing is that if here also the rate was 1, we could club these two. Since here the rate is 1 and here the rate is 2, we separately write it. If the rate here also was 1, we could club this 200 plus 100, 300, 1 we could write. Okay, so this is the method. Then another case is given, January 5 issue 100. So let's see, January 5 issue. So if in FIFO method, what we'll do, we'll issue from the first stock. So first stock is 100. So from it we'll issue. So issue is here. So 100, 100. Then we should see what is left balance. This 100 is already gone. So only 200 is left for that day. So 200 into 2, 400. This is the stock, balance stock. Okay, this is in the case of FIFO method. If this issue of 100 was under LIFO method, then we'll do 100 itself, 100, we have to issue anyway 100, but that 100 we take from the second lot, that is last in first out. So, and second lot, so the rate also change, it is 2, so 100 into 2, 200 will be the issue. So the closing stock will also change, because under LIFO method we have issued it from this. So the balance is, we have to do the balance. This 100 is there itself, we have not touched it. So it is there, 100 into 1, and this, and from this 200 we have took 100, only another 100 is left at the rate of 2. So this will be the closing stock. Okay, so this is how to do the problem of FIFO and LIFO method. And then another thing is average price method. The only difference in average price method is that there in the balance column we should not write the rate column, only just quantity and amount is enough. Only two columns should be there under average price method. And here again we will issue. Under average price method we have told we will take the rate based on the average rates. So this 100, okay, this 100 we will issue by averaging these two rates. So 1 plus 2 by 2. Okay, that is 3 divided by 2, that is 1.5. Okay. So this rate we have to find out by averaging these two rates. So then 1.5 into 100, then we will get 150. Okay. So this is the issue. Then again, while coming to balance portion, what will be the balance? That we will ascertain by, now we have already balanced some 300 we have in quantity, and also amount is some 400 plus 100, 500. So then we can find out the balance column like that. From this total 300, 100 is gone. So the balance left is 200. And also the amount is, now there was total 500 and among it 150 is gone. So 350 will be the balance rate. So this is the just difference of average price. All other is the same format. So hope you are clear with how to solve a problem based on this FIFO, LIFO and average price method. Hope you are clear with evaluation of inventories. Thank you.